Okay, so I'm gonna, so what I'll do is I'll record a separate video so that way I can go into more detail on each slide. But I'm gonna go through this real quick and just give everyone a high level overview. The three things we're gonna talk about is how to beat the bully, which is the IRS, the 5 ways to resolve your clients' IRS issues, and how to get your clients help. So I get a question a lot as far as why someone should use our firm. And I always like to point out all we specialize in is tax resolution. We don't do accounting work. We don't do tax preparation work. We do for our clients when we're helping them get their issues resolved. But as far as year in and year out, we just don't take clients on to do their taxes. And our software is specifically designed for tax resolution. So, what do they say? Inch wide, a mile deep. So that's literally like our only focus is tax resolution. And so I'm gonna skip this, and I'm gonna talk about who the bully is and why they're so powerful. Now, this slide I made a couple of years ago when President Biden was in office. So some of this information is going to be a little outdated, but I want to speak to it for a certain reason. So right now, there's roughly 15 million taxpayers who owe the IRS 458 billion. That number has actually gone up quite a bit. And with the second bullet point, the IRS just received 80 billion towards enforcement. So I think now the number is about 40 billion. And we're talking, the question earlier was like, what's something that you've learned recently? So I just got off the other day off of a call with people within my industry who have very close ties to DC. And they're saying of that 40 billion, a significant amount went to AI software. So even if you see further reductions in the IRS, this software, this AI is going to be able to start looking for patterns of people who typically push the limit or even cheat. A question I get a lot of right now is, what do I anticipate coming? There's no anticipation. We are seeing stronger enforcement. We're seeing stronger audits. And we're seeing collection notices go through the roof. So we're seeing that right now. My opinion is you're going to see independent contractors who are receiving 1099s and people with LLCs, small business owners, they're going to get hit hardest. And also, too, on this call I got off of, they were saying your state, local, or your state tax authorities are actually going to start, they're going to really start cracking down. So just because the IRS is going through what they're going through, we're not seeing any slowdown whatsoever. Right down here, the first bullet point in black said the IRS is in the process of hiring 87,000 new employees over the next 10 years. So right now, we've seen the IRS as far as the decline in numbers due to layoffs. Something I want to point out, and I stress this because this is a conversation I've had significant amount leading up to the 14th. The IRS is not going anywhere. And President Trump is a president. He's only going to be here for 4 years. The IRS collects 50% of the revenue for the U.S. So even now, we're anticipating still that there's going to be an expansion of employees in the next coming years. And so coming over here, now the reason I put this slide in, that the IRS is the most brutal collection agency on the planet, really they're more powerful than the president. Because if the president wants to get to your checking account, he has to go get a warrant, I believe, from the courts. The IRS, they just go into your bank account and take your money. They don't have to do that. And so coming over here, now you can be your client's hero, strengthen your bond with them, and as a result, increase your referrals. So what I'm going to share with you is you can help your clients who are selling a home and they owe back taxes, or if they owe their home. Really, anyone who's dealing with IRS, if they're a client of yours, you can help them out. And there's 5 ways that we approach helping them. These are the 5. Unfiled returns, and I'm going to go into detail on these. Offer and compromise, installment agreement, partial pay installment agreement, penalty abatement, and removal. Now, there's a lot of other programs under these, but for the sake of time, and then we'd be going down a rabbit hole. I'm going to cover these top 5 because they're pretty much the 5 we deal with as a whole. So on unfiled returns, before we can get anybody settled with IRS, we have to get all their back returns filed and up to date. And I'm going to just give you a quick case study. Let me move this. So yeah, so we had a taxpayer who had 4 years of missing tax records on unfiled income tax returns. The IRS prepared the substitute returns. This is like if you don't file your returns, they're going to file it for you, and this is what they're going to come up with. So the IRS came up with over 62,000, including penalties and interest, and they were threatening levy action against the client's wages and bank accounts. Now, we're able to protect the client and reduce the amount owed to $3,800, saving them $58,000. And a lot of this comes down to whenever these substitute returns are done, there's no losses carried forward, there's no credits, nothing is factored in. And most of the time, most taxpayers aren't even aware that they have these. So just getting returns filed sometimes solves the issue altogether. Now, the second thing is an offer and compromise. Now, this allows your client to settle their debt with IRS for less than the full amount owed. And actually, in many cases, it's significantly less. Now, our goal, we try to do it cents on the dollar. So here's some considerations. The ability to pay, their income, their expenses, and their asset equity. So the IRS is going to look at everything from how much equity you have in your home to even if you have additional homes, even if you have a whole life insurance policy. They're going to take a look into those type of things. So sometimes we tell a client who's got too much positive income, go buy a car. Let's show some expenses. So let's see. I'm going to come over here. So now our approval and acceptance rates are much higher than the national average. So last year, the IRS only approved about 30% of all offers. When the compromise is submitted, ours is actually more than double. And the reason being is we don't submit an offer and compromise if it's not going to be successful in the first place. The way we determine this is we reverse engineer and we use our software that has AI in it. And our software is actually helped managed by former IRS agents. And so all this information and their experience goes into there, and it tells us up front what's the likelihood of an offer and compromise and other programs being accepted. And so I'm going to come back over here. Now, an installment agreement, now that's a properly structured payment plan is in agreement with IRS to pay tax liability owed within an extended time frame, generally 72 months or shorter. Typically, the shorter the better, because the IRS, if they have to go out, they're going to charge you more on interest. So right here, this is what I come across this more times than not. Many taxpayers enter into a payment plan thinking the IRS, once they're in this payment plan, they're great. But the thing is, the IRS has continued to add penalties and interest on top of penalties. So think about it like paying off a credit card and the monthly minimum, and you have a large balance. You're kind of just treading water. So what we do is we go in there and we negotiate, okay, everything from the interest rate, and we even address the penalties. And so right here, last bullet point, you don't want the IRS to manage your client's monthly cash flow. We want to tell the IRS what the client can afford. When I say we, us and the client. So I'm going to come over here to partial pay installment agreement. It's similar to regular installment agreement where the client is making monthly payments over time to the IRS. However, under this option, you're only paying back part of the taxes owed, and you owe the remaining amount you pay over time. And again, we always try, like our main goal is 11 cents on the dollar. And so we use a partial pay installment agreement when they don't qualify for an offer in compromise. They don't have enough monthly disposable income to qualify for a regular installment agreement. And in some cases, this option may be more advantageous to your client than an offer in compromise. Let me give you this case study. So we did have a client come to us on $45,000 due to non-payment of taxes dating back several years. They were strong-armed into $800 a month. So when we intervened, we were able to get it down to $200 a month over 43 months. So it was $8,600. So with that, we saved them $36,000. So penalty abatement and removal. It's a question I get a lot on. So most folks aren't aware there's 148 different penalties that the IRS can assess. And here's the kicker. They can charge interest and additional penalties on top of the original penalty. So again, the IRS is responsible for 50% of the revenue collected. They're not going anywhere. Now, we often reduce payments to zero. We do request a first-time penalty abatement under the IRS Fresh Start Initiative if they qualify for that, and then request relief from penalties due to reasonable cause. So some of the reasonable causes: death, serious illness, unavoidable absence, like coma. If somewhere is declared a natural disaster area, fire, flood, pretty much if an area has been declared a FEMA emergency, that would qualify. Inability to obtain records. Now, right here, mistakes by the IRS and written oral advice from the IRS, and ignorance of tax laws. The reason I point these out is a lot of the people who have recently been laid off from the IRS, roughly 7,000, actually, they're all probationary employees, meaning they've been there for less than a year. Their training, a lot of them did not have a background in taxes, so they were trained through the IRS. There's a lot of times we had discussions with revenue officers that didn't even know the law, that they were just doing what they thought from training. So we actually had to point out to them, listen, he would say it as professionally and polite as possible, you're wrong. And so we in our software, we notate everything that's said. And this is another reason we tell people do not talk to the IRS, because you can agree to something and not realize to the last moment you agreed to something that you should not have. And let me give you an example. We had a sales manager for a car dealership. The IRS came to his door. He owed about $125,000. He hadn't filed his taxes a number of years. So he was smart enough to tell them no, they weren't coming in, that he would meet them down at the Dallas office. Well, he went down there. He agreed to a bunch of things. His tax debt went from $125,000 to $300,000, all completely legal. So that was a very hard lesson for him to learn. So right here, knowing how to write, file, and submit a formal penalty abatement request that the IRS will accept is as much as an art as a science. The reason I wanted to point this out is before, depending on how fast each of you will have experience, on how quickly you can put together an email with whoever. I tend to write very slow. Here's what's really cool about our software that has AI embedded in it. It actually, when we send out a client questionnaire, financial questionnaire, they populate it with all their information. And as we're putting notes in the case, we literally just tell the software, we click and we say, hey, we need a penalty abatement request. We can decide if we want it all fact, emotional, or emotional impact. And literally it's done in a matter of seconds. So the name CETO tax resolution, CETO is Latin for swift. And instead of waiting for someone to start, someone in-house to put together this letter, literally we just click build letter. So it's saving time. And right here, and I really like this one right here. A divorced taxpayer was assessed over $17,000 in failure to file and failure to pay penalties from 2014 to 21. This was due to his inability to obtain records from his estranged wife, as she would not permit access to any of his records. I'm sure all of us have dealt with some kind of client where the former spouse was not willing to work with them. Now, we filed a formal penalty abatement request due to reasonable cause, and we were actually turned down by the service center. So we filed a formal appeal protest and won the case at appeals, saving the taxpayer $17,000. So coming over here now, how to get your clients the help they need now. Well, yeah, has anyone had any clients or themselves? Well, you don't have to answer for yourself, but have had to deal with the IRS? Okay, good deal then. So how to get started. So bookmark our website, connect with me on NADP. And if you have to send a client over, let them know, have them tell me that they're a referral from the NADP network, and we'll give them a free tax debt analysis consultation. And with our software, what we do is we directly pull all their tax transcripts directly from the IRS website or the IRS portal, because we want to look and see exactly what the IRS is looking at. So any questions?
No, but I want to be your best friend.
Yeah.
Or I want you to be my best friend.
Yeah, so the business is getting really good. You know, we're seeing an increase in bankruptcies. We're seeing higher mortgage rate defaults. And all this in the end, it's like, do you pay for your house, your mortgage, or do you pay, to keep a roof over your head, or do you pay this tax bill? And a lot of times I tell people too, with the IRS, out of sight, not out of mind. Because if you haven't been contacted yet and you know you have tax debt, penalties and interest are accruing. I have seen people who had massive tax debts when they decided to deal with it. And they're like, how did it get to this? It's like, well, you hadn't dealt or filed a return in a number of years, and interest and penalties, you're now looking, and I kid you not, like over $100,000. We have a lot of people who are looking at getting married, and one of the couple, one person out of the relationship is very financially secure, and the other person's gainfully employed but hasn't taken care of taxes. And I'm thinking of this one couple. He had $60,000 in back taxes, and his fiance told him get it taken care of or get down the road. He ended up getting down the road, and which was crazy because it wouldn't have taken much to get him squared away. Any questions?
It's new meeting to love can be taxing, doesn't it?
It does. And so, okay, well, also under this, we do innocent spouse relief. This is where one spouse, when a married couple's, when their filing status is married filing jointly, they're both responsible for the tax debt. Typically what happens is we see one spouse takes care of all the financials and the other doesn't even look at it, and then ends up having this huge tax debt due. And I've seen multiple scenarios where, it's a small business owner, and they're going through a divorce, and the wife, she's saying, we're splitting up. I had nothing to do with this. I shouldn't be responsible for this. So, we use innocent spouse relief there. If there's a history of spousal abuse and intimidation, that's a factor too. So even though I went over those 5 things, this goes very, very deep as far as what we can do for people.
Do you have a slide on that innocent spousal relief?
So I don't have a slide on this one, but Jenny, I'm putting together a whole presentation on innocent spouse relief that I'll put on my YouTube page, and I'll also submit to NADP and our local chapter on social media.
Okay, good, because I
Mhm.
just did some snippets on several of your slides that I see that I can help promote your business and tell people at the same time, educate them a little on some of this stuff.
Yeah, well, thank you.
Okay, well, if there's not any other questions, who's the speaker next month, Sue?
It is our very own Jim Martin.
Jim. Okay, yay. Okay. Well, it looks like we are going to